Well, our holiday shortened week had a very interesting feel to it today as investors were grappling with this news that there was a coronavirus developing in China that's starting to spread worldwide. We even heard late today that there might be a case here in the United States, but that had a very interesting effect on the stock market where some areas like healthcare and utilities and other safety areas did quite well. And then other areas like the industrials and consumer discretionary really sold off. So we had the haves and the have-nots in today's market, but it all resulted in a down market at the end of the day. We did have what's known as bullish intermediate confirmation signals across the board here today, so we'll talk about that in tonight's video. And then I wanted to review a trade application example where you can take advantage of a stock that's largely just trending sideways. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 21st, 2020. First off, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe, and while you're over there, check out our description area where you can sign up for our email distribution list. We also have a big presence on Twitter. Make sure you're following me there at Brandon Van Zee, and I appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we have a presence on Facebook. Make sure you're following us at the web address embedded in the logo in front of you. All right, let's go ahead and jump into our charts. As you can see, I've got chart 4B pulled up here in front of us. This will give us a nice overview of the four major U.S. equity markets. And as you can see, we were lower here in all four of our cases today. The Dow Jones was hit a little bit harder than the S&P 500. Part of that is as a result of Boeing was in the news yet again today. Boeing came out and said that they are not expecting their MAX fleet to hit the market until mid this year. And I think there was some initial expectation that it would be in the spring. So that hit Boeing, which, as you may recall, Boeing is the highest share price stock in the Dow Jones and therefore the most influential in the Dow Jones, whereas the S&P 500 is a market cap weighted index and Boeing does not have the largest market cap. So Boeing is going to affect the Dow Jones more than the S&P 500 for better or for worse. When Boeing's up big, it helps the Dow Jones on average, and then when Boeing is down big, it hurts the Dow Jones on average. Also, be aware that the NASDAQ composite hit a new all-time intraday high today. It did close lower like our other indices, so the NASDAQ was down 0.19% at the end of the day. But en route to that lower close, we did actually touch just briefly a new all-time high on an intraday basis that is now up there at 9,397. The Russell 2000 was down the most today. Now remember, that's not particularly unusual. The small cap universe is one that comes with more extreme movements both up and down. So it's fairly typical when we have a down day in the broad markets that the Russell 2000 is the one that leads on the downside. And that was the case here today, 0.81%. But I did want to point out what I mentioned in the intro, which is all four of our charts have what's known as a bullish intermediate confirmation signal. And as a reminder, that signal exists when we have a bullish posture using that green intermediate line, and then at the same time have the red momentum line in the lower reversal zone. So as you can see, the green line on all four of our charts is in the upper reversal zone above 80, so automatically constitutes a bullish intermediate posture. And again, you know that automatically by looking at this color-coded chart as well, because the background color of all four of our charts is green. So that's step one, identify the bullish posture from an intermediate perspective. And then step two is the red line has to be in the lower reversal zone. And you'll see here that that red momentum line on all four of our charts is currently below 20 and therefore is considered to be in that condition of a bullish intermediate confirmation signal. However, I will point out that none of these signals would be considered ideal. The one that probably looks the most attractive is the Russell 2000. You can see that the Russell 2000 has fallen the last couple of sessions with these red candles right here. And it's been a little bit more of a give back, right? You look at something like the NASDAQ, and yeah, it was down today, but just barely. And the same thing could really be said for the S&P 500. Remember, the bullish intermediate confirmation signal is a buy the dips mentality. But if that dip hasn't been strong enough, it's usually not really all that enticing to buy that dip. And therefore, when you look at the Russell 2000, that's actually a little bit more of a legitimate dip there. I mean, it's not an extreme move by any means, but if you've been patiently waiting while the stock market has been in an uptrend for a brief pullback for you to enter into that upward trending market, then you're kind of looking for something like this, where we've had this 2-day pullback in the Russell 2000. But it hasn't broken the trend, right? If you look at this chart, you're not seeing broken support areas anywhere. In fact, another kind of interesting element from a technical perspective of this Russell 2000 chart here is that where we kind of closed here today matches up nicely with where the prior resistance area was back here at the end of 2019, would have been December 26th and December 27th. The highs on those candles match very closely the low on today's candle. So there is that technical analysis theory that old resistance can become new support. So perhaps we may be able to get a little bit of a bounce based off of that theory in addition to the bullish intermediate confirmation signal. Now, the reason that this one is not considered ideal is because the red line is below 5, and that is considered an extreme move. Ideally, you want that red line to be somewhere between 20 and 5. Once it crosses 5, then that's a little bit more of a push lower, where you're starting to wonder if the bears are starting to gain control of the chart. So anyway, of the 4 charts, it does appear to me that the Russell 2000 is the one that has the more interesting setup. Notice that the blue line on the Russell 2000 is between 50 and 20. It's sitting right here. You can read it in the label at 34. The other blue lines, so whether you're looking right here on the Dow Jones, it's at 60. The blue line on the S&P 500 is at 82. The blue line on the NASDAQ Composite is at 84. None of those other 3 charts have the blue line between 50 and 20. So it's kind of telling us we haven't had enough of an exhale here to get excited about a buy the dips mentality setup. So at least we can kind of make that claim a little bit more so there with the Russell 2000. So for those of you that are bold enough and looking for bullish opportunities, maybe there's an opportunity there with the Russell 2000. Let's go ahead and take a look at another chart setup. In this case, we're going to go ahead and take a look at the 3 green arrows chart setup. And as it stands right now, it's kind of the same story as it has been in recent sessions, which is we do have 3 green arrows on all 4 of our charts still at this point, despite today's sell-off. Remember, the 3 green arrows is effectively just 3 different technical indicators, and you're trying to see if those technical indicators are giving you bullish or bearish readings, with the green arrows representing bullish readings. So right now, that's still the case. Price remains above a rising moving average in all 4 of these charts cases. You can also see that the MACD histogram, which would be the second arrow that we're looking for, is above the 0 line in all 4 of our cases as well. So you do have those green arrows showing up down below there in the MACD histogram. And then we do have what's known as phantom green arrows right there, right there, right there, and right there, down below on all 4 of the charts as well, where the stochastic indicator was kind of meandering lower. It didn't quite get to that lower reversal zone on the stochastics. Remember, that lower reversal zone is at 25, and then it starts to turn tail and head higher again. So that's known as a phantom green arrow. It doesn't actually go down into that lower reversal zone and emerge. It emerges, or it reverses, I should say, before it even gets to that zone, and that's called a phantom green arrow. And those are actually considered in many cases more bullish than a physical green arrow. So the point is, we do have 3 green arrows on all 4 of our charts at this point, despite the small sell-off that we experience here in the United States today. Now remember, there were certain areas of the market that were selling off much more aggressively than others. And some of the areas that get impacted when we have a little bit of a scare from a virus situation like this are going to be kind of some of those travel stocks, some healthcare stocks, and different things like that. Remember that we had an Ebola scare here, might have been back in, I think, 2014 or 2015, somewhere in that time period. And then we also had the SARS outbreak maybe about about 16, 17 years ago. So we've had a couple of these types of scenarios play out, and they can lead to market weakness. So don't just outright dismiss it. We didn't have a huge down day in the market today, but these things can start building upon themselves. And if we start seeing more and more of these cases show up here in the United States, and they start leading to more and more deaths. Right now, fortunately, I think there's only been 6 reported deaths from this. But if this starts to really kind of take on a life of its own, it can start impacting the sentiment that controls supply and demand on Wall Street. So we have to keep our eyes on that. But some of those areas that were kind of hit here today, let me go ahead and maximize one of these charts so you guys can see this a bit better. But airlines really got hit today. So let's take a look at Delta Airline. You can see it was down 2.7% at the end of the day. However, in the middle of the day, this thing was down, I want to say like 6% or so. So it actually bounced pretty nicely. See that long lower shadow there on that candle. So that one ended up having a nice bounce. I don't know if that was the case with the rest of the airlines as well. I got pretty busy here in the afternoon, so I haven't checked on some of these. But let's just check Southwest. Southwest actually closed in the lower half of its range. It was down about 2.7% today. UAL, it's United Airlines, it was down 4% here today and closed in the lower half of its range. I think it reported earnings after hours. Yeah, it did. So let's check in real quick here on UAL. And it's pretty flat after hours. It's still trading right around 85, 70 or thereabouts. So those are some of the areas there that got hit from an airline perspective. Of course, some of the travel agency stocks are going to get hit. So BKNG, Booking Holdings, this is kind of Priceline for those of you in the United States, Booking.com over in Europe, and they own some other travel websites worldwide. But anyway, this company was down 3% here today, so it was down $64 per share. It's a high price stock. That equates to about a 3% give back on some of that news that we've been hearing here today. I think Expedia might have been down a little bit. Yeah, Expedia was down about 1.5%. Other areas, one that was directly affected, and this company went through a reorganization here recently, but TCOM. Some of you might be familiar with C-Trip. That was the old company name and old ticker symbol as well. But here within the last year, they changed their name to Trip.com, and their new ticker symbol is TCOM. And this is a company, this is a travel agency directly in China. In fact, I've used this company myself. So it is a company that it's a legitimate company. It's not just some shell game type of company. Sometimes we got to be careful here with some of the Chinese companies that end up listing in the United States. Some of them have proven to be quite fraudulent. But this one right here is actually a legitimate company. It's a real business that makes real profits. And they are a travel agency in China. So you can kind of think of them as like a Priceline over there. And so anyway, this company, as you can imagine, kind of being front and center in the home country where this coronavirus is making its biggest impact, it was down significantly today. You can see that it was down about 8%. However, this stock has been on such a strong uptrend here recently that it actually stabilized right around its upward trending moving average. So depending on what shakes out with this virus going forward, who knows? Maybe this ends up becoming a bit of a long candidate after kind of establishing a base. But obviously, you're going to need things to start developing in a more positive nature from a health perspective there before that probably is a all systems clear type of a situation. Other areas that got hurt today were kind of the casino stocks, right? A lot of these companies like Las Vegas Sands, don't let that name fool you, LVS, they have a major operation over in Macau. In fact, that I believe might have been the trip where I was using C-Trip. My brother and I went to Hong Kong, and we ended up going down to Macau to check out some of those casinos down there as well. And remember, a lot of the big American operators do have casino licenses in Macau, and Macau is basically the only place that's legal in China to gamble. So it's a big market. In fact, some of the table stakes are larger in Macau than they are in Las Vegas itself. And so this company here, its prospects kind of rest on whether the Macau gambling markets are strong or not. And you can see Las Vegas Sands was down 5.4% here today. Wynn also has a big operation down there, and Wynn was down over 6% here today. And then MGM also operates down in Macau, and it was down 6%. And you can see how ugly of a candle that is on MGM, which is typically a slower moving company, but that really took the wind out of its sails here with all this news about the coronavirus over the weekend. So those are some of the companies that were negatively impacted. But remember, there are going to be some companies that get positive benefit. Now, I'll forewarn you, a couple of these are extremely small companies, so we got to be careful here. But I will tell you that the last time we had a major outbreak, there was a company, APT, this is Alpha Pro Tech, that really erupted, and I had a feeling going in today that it would as well, and indeed that's exactly what happened. In fact, there was a major gap up, and this stock ended up closing higher by 38%. Now again, this is a small sub $5 company. You have to be really, really careful with these because they're highly, highly speculative, but they fit the theme. This particular company makes those masks that you put over your face that you see people walking around in the streets with if they have, lung conditions or different things like that. But anyway, I remember this one. If we go back here, maybe let's go back on a 10-year chart. You can see that this thing just absolutely erupted back here in 2014, and this was during that Ebola scare, and that stock basically went from like $2 up to $10 in just a couple of months. Now, who knows if that happens again this time around? Obviously, highly speculative, but remember that some of these are trading toys for various market environments that exist. And this is the type of market environment where this particular company can do well. Another one that kind of fits that particular vein is ticker symbol Lake, Lakeland Industries. And you can kind of see the same thing. Lake was up 25% today, as they make some of those kind of hazmat suits and different things like that. And same thing, back here during the Ebola scare, this stock was like a $7 stock that went up to $29 in a heartbeat, and then of course gave all of that back. So these are not necessarily like long-term moves we're talking about. These are speculative trades while the public is fascinated with whatever the disease du jour happens to be at that given moment in time. One other stock that didn't really pop to this degree, but oftentimes gets mentioned as kind of a biotech, it's Emergent Biosolutions. This is EBS. This was only up 3% today. This is a company that has stockpiles of vaccines and other drugs to take care of things like anthrax and things like that. So I don't know if they have anything specifically around this neurovirus, but this stock was up 3% here today as well, and kind of helped support the healthcare stocks in general. So anyway, that kind of led to a more interesting feel to our market today as a result of these headline stories that were really driving trading action. Let's go ahead and take a look at our sector 12 grid, because that kind of concept will hold as we look at chart 5C now. And you can see that there were the haves and the have-nots. On the bottom rung here, we have all of the charts that were in the green here for today, meaning that they finished higher today. Healthcare was up 0.11%. Staples were up 0.34%. Utilities were up 0.91%, and real estate was up just over 1%, 1.01% to be exact. So all four of those are at the bottom here on this chart 5C because of their defensive nature. So I've kind of got that in order of its in cyclicality and defensiveness and interest rate sensitivity and all that. So all four of those at the bottom are placed there for a reason, because they kind of share some common elements together with their defensive nature and their interest rate sensitivity. And, they've been quietly improving on a relative basis as well. This is not just a one-day phenomenon. You can see here that utilities have gone up. It appears to be 1, 2, 3, 4, 5, 6, 7, 8 days in a row. You do not see that very often out of a very boring area of the market like the utilities, but I mean, those things have just taken off ever since bouncing off of this moving average here on January 9th, they've basically just gone up in a straight line. And you can see that real estate is not that far behind them in terms of the move they've made off of that moving average. And the staples look pretty strong here as well. In fact, I noticed like a stock like Costco, which happens to be a stock that we've traded in my Monday top-down trend trading classes in the past. That stock was up tremendously here today. We've already talked about some of those healthcare stocks that benefited from kind of fighting against the coronavirus, and then we have a little bit of interest rate sensitivity working on the behalf of the utilities and real estate. Meanwhile, the other areas of the market were all in the red today. So, to various degrees, we had technology only down 0.04%, so just barely down. But we had some other bigger movers to the downside, which included energy was down 1.79% today. Materials were down 1.08% today. And then industrials were down 1.1%. So remember, the industrials will be negatively impacted by both the Boeing unique situation with their MAX not coming out until mid-year at the earliest. And then in addition to that, all those individual airline companies like Delta and United and all those struggling with just the general travel concerns based off of the coronavirus. So, those areas were hit a little bit larger here today. And so it had a feel of a risk-off type of a day, but the risk-off areas actually did quite well. A lot of times when you have a risk-off day, you might have, let's say, 9 out of the 11 sectors lower, and the 2 that were up were just barely up. But today was interesting because the ones that were up pretty substantially. I mean, utilities and real estate were both up about 1%. That's a really strong day for those sectors themselves. Let's pop on over here to the internet real quick. I wanted to point out on my sector selector. Remember, this gets updated on Friday night, so this is a bit stale at this point. Not too bad, but a bit stale at this point. And you can see here that the sector selector didn't have a whole lot of changes on it because the top 3 stayed the same. However, I do want to point out that the real estate and the utilities area really had a nice bump, and that supports what I was just mentioning a moment ago when we were looking at the charts. Look at utilities here. They went from number 7 last week up to number 4, so they leapfrogged 3 slots up to the 4th position. And real estate went from 10 up to 7, so kind of leapfrogged a couple of positions there as well. So those are really strong movements. And remember, that was before today. That had no influence by today's 1% up moves that we saw in the market today, because these rankings were established on Friday night before any idea of what was going to happen here on Tuesday after a long weekend. So we already had an indication that the utilities and the real estate areas are starting to stabilize and get a nice little pop there. So, keep your eyes on those areas. We could have some interesting long candidates in those areas going forward. On the downside, energy continues to stink up the joint dead last yet again, which has been the case more often than not over the last year. And of course, energy was the worst performer today as well, so that's not going to help their cause as I go into a new set of rankings this upcoming weekend. While we're over here on the internet, just wanted to quickly say thank you to those of you that clicked the like. The last time I did this video, it would have been on the 15th. 104 of you did that. Anytime we get up and over 100, I'm pleased with that, and we'll generally give you a full half-hour video there. Once we're below that 100 mark, then I generally have a little bit of a shorter video there for you. So I'll leave that up to your hands. If you want a longer video, make sure you click like. If you want a shorter video, just don't do anything. All right, let's go back on over here to our charts, and let's review a few more. Let's take a look at the asset classes here. And the asset class 12 grid will be chart 5A. Oh, for some reason, my platform just disappeared on me. Interesting. Okay, here it comes. And as you can see, I've pulled up the 5A chart here, which is the asset class 12 grid. And one of the bigger movers on the board was in the lower right-hand corner here. Notice that the 10-year U.S. Treasury really fell today. You don't really think in terms of percentages here, but it was down 3.6%. Really more important is where did it end in terms of what's the actual 10-year yield right now. And the 10-year yield is now at about 1.76%, and that is its lowest reading since going back here to early December. And so with that big move lower on interest rates, of course, that helps support having utilities and REITs go higher, like I mentioned there a moment ago when we were looking at the sectors. And you can see even right up above here a slightly different view of the REITs. This time the Vanguard version of it. You can see that VNQ was up 0.95% here today as well. And in fact, that particular ETF hit a 3-month high today. I really did not anticipate that occurring. This was a stock or a chart here, in this case an ETF, that was in quite a significant downtrend up until December 18th. And boy, when it stabilized, it didn't take long to stabilize. It really started to go higher. So I'm a bit surprised to see VNQ up at those new high territories right away. But it really helps when interest rates, as you can see below, interest rates go lower. REITs tend to go up, and that has played itself out so far this time around as well. Other big movers today, as you can imagine, the emerging market stocks really suffered today. So you can see EEM as an example. It still has a bullish background, or a green background, which denotes a bullish intermediate posture. We're still above a rising moving average, but boy, that was a big give back here today on EEM. It was down 2.5%. So we're going to see if it can stabilize around that upward trending moving average there. All right, let's go ahead and get into our trade application here today. Wanted to bring up, let's just bring up chart. Let's see, let's just do 3A. And this will be a normal kind of swing trading chart. As a reminder, I teach my swing trading class on Wednesday morning, so I'll look forward to seeing many of you premium members there tomorrow. I taught my dividend growth investing class earlier today, and that is now posted if you want to hear my comments about the financial sector and some of the dividend growth investing stocks in that particular area. But for this presentation here tonight, I wanted to pull up a somewhat controversial company. It's FedEx. This is a company that can't seem to get out of its own way here in the last year or so. Of course, separated with its relationship with Amazon here in the United States, and has kind of struggled to a degree on a relative basis, at least if you're going to compare it to its chief rival, UPS. So FedEx really has not participated in this big bull market that we've had here in the last year or so. And as you can see with this chart, it is largely going sideways. We have a high price here of $168.37 back in would have been December 16th. And then you can see it reported earnings. The stock market did not like the earnings at all. Stock gapped lower, came down for one more day, touched a low of 146.24 right here, started stabilizing, and has been kind of working its way back higher since then. Well, you can see after giving it a good run off of the bottom, it kind of stopped short of touching a new high. So this is different than the VNQ chart I showed you just a moment ago, where it really went down significantly and then ripped back up to new highs just as quickly. This one is much more traditional of a chart movement, where you have a big move lower. It has a big exhaustive effort to push that stock as high as it can back the opposite direction, but cannot achieve breaching those prior highs, and then starts rolling over again like we saw here in the last week or so. So you can see right now we do have that pink background color suggesting we have a near-term bearish posture on this one, but at the same time we also have a green moving average here that suggests prices above a rising moving average. So we have kind of dissenting feelings with this one, some bullish, some bearish. And when you have a sideways chart here that has kind of, you know, bulls and bears in various camps, sometimes it's better just to play the middle of the road and do a neutral trade. So on this one tonight, I'm going to do what's known as an iron condor, where you're selling a couple of credit spreads, one on the top side and one on the bottom side, and collecting a premium where you are rewarded if the stock continues to travel sideways. So coming on over here to the trade tab, I'm going to come out here to the March contracts here. I usually look between 20 and 60 days until expiration. So let's go out here to March with 59 days until expiration. And the ones I wanted to focus on here are going to be the 140 put And so this would be the delta that's about 15 in this particular case. I'm going to right click on that. I'm going to go to sell iron condor. There it is. That'll load up my trade down below. And then you can kind of see that I can adjust the contracts down below in the trade itself. So I'm going to go on the put side. I'm going to sell the 140. I'm going to buy the 140. The 135 put. So selling the 140 put, buying the 135 put is that short put spread. Now on the call side, I'm also going to kind of go out of the money here. In this case, remember, we need a higher number, and I'm going to go out to 175 strike, and that is the 18 delta in this case. So I'm going to come down here, and I'm going to look at the 175 to sell. We're just adjusting that, and then I need to change the bought strike on the call side to 180. There we go. So this is the iron condor. You can see I now am receiving $1.21 for this. Now typically on these credit spreads, I want to get at least a 30% return on risk. So in order to check that, I'm going to click on the confirm and send button one time. It'll then show us what our max profit and our max loss is. So I'm going to click on this calculator here, and I'm going to take $121, which is our max profit on this trade. I'm going to divide that by 379, and you can see that our return on risk is just over our 30% hurdle rate. It's at 31.9% in this case. Now you'll also notice where our break-even prices are on this trade right here in the order confirmation dialog box itself. So 138.79 is one of our break-even prices, and then 176.21 is the other break-even price. Remember, when you're selling both sides, you have two different break-evens on a trade like this. So if you wanted to get a sense of where that was on the chart, we can come back on over here on the chart. Let me just get a drawn item out here, and I'm going to draw a couple of price levels. I'm going to draw one up on the top, and I'm going to draw one down on the bottom, and then we'll adjust those as necessary. So I'm going to right-click on that top one, go to Edit Properties, come in here and type in 176.21 and hit OK. And then I'm going to right-click on that bottom dotted line, Edit Properties, and I'm going to go to 138.79 and hit OK. Now some of you are looking at this and saying, well, geez, Brandon must have done something wrong. Those lines are no longer on there. Remember, that can actually be viewed as a good thing, because what's happening here is we are giving ourselves so much wiggle room on this trade that our break-evens are literally off the chart. So if you need to adjust your chart, you can kind of squeeze it together over here on the right-hand side. So I'm going to adjust that by, I'm kind of just holding my mouse down and dragging it towards the middle there. Now you can see those break-even levels kind of starting to appear out of nowhere there. Those represent our break-evens for this trade. In other words, if you think that this stock will stay somewhat below this upper blue dotted line, but somewhere above this lower blue dotted line from now until the March expiration, then this is a trade that you could make money off of. You can see that it is a wide ranging potential outcomes there without us necessarily having to lose money on this trade. Ideally, we stay somewhere in the middle, but even if it goes up quite a bit or goes down quite a bit, we're still in pretty good shape. We would have to see major moves here beyond 175 and below 140 before our trade gets into hot water. Now, there is probably going to be an earnings announcement between now and then, so we have to be cognizant of that. But as long as this stock stays generally in this sideways trend that it finds itself in right now, we should be able to make money off of this trade. So let's go back on over here and go ahead and click confirm and send again, and go ahead and send that in and see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again. Interesting day in the market. Lots of stocks that you normally don't think about making major price movements as a result of a lot of this coronavirus type of a situation here. So we're going to keep our eye on that story. We're going to see if this market can remain in an uptrend and in its bullish posture that it has been for a while. We do have bullish intermediate confirmation signals in a lot of our charts here today, as I showed you earlier as well. So I hope you got some value out of tonight's video. If you did, remember to go over to click like on Twitter for me. All right, with that, have yourself a great rest of the night. Take care. Bye-bye.